All right. Hello, everybody. Welcome back for another market open. We are here today. Yes, I am 1 minute late. I get it. I was actually adjusting the camera that's still not fully adjusted, but we are here and we are ready to go because today is going to be an exciting day, folks. Today's going to be a very exciting day. And the reason today is going to be an exciting day is because we got Nvidia earnings. Nvidia earnings today is going to be absolute insanity. Patrick here says, I'm going to start streams 1 minute early so you all can't say I'm late. That lasted one day. Yeah, it lasted less than 24 hours, but we're still here. And dude, today's going to be crazy. Today's going to be absolutely insane in regards to what we got going on. We have Nvidia after hours. Yes, we've got to talk about Target. And Target is actually kind of bullish in terms of what we're seeing in Target. And for inflation, even if it's not good for the stock. So we'll be talking about Target. We've got Nvidia. We've got Bitcoin news. We've got Snowflake after hours. We have Elf Makeup after hours. There is so much stuff that is happening today. Tesla European sales are out this morning. PDD, Pinduoduo from China. It looks like China's actually making a recovery. Their stock is up 8%. Massive EPS beat. So we've got a lot to talk about this morning. And to get into it, all the analytics on the internet are messed up. So as June said in the chat, YouTube live viewing analytics are completely messed up. Twitter analytics, I don't know how many people use Twitter. Like right now it says 25 people are watching. I'm sure that's not true, given there were like 170 people here 2 seconds ago. So like the YouTube analytics are messed up. On Twitter, it's not even showing you like your views for the day. All of it is like, it's just all screwy. So in terms of analytics on the internet, I don't know what the engineers are doing at Twitter and YouTube, but there's just a ton of like mistakes all throughout the entire internet, which is actually kind of funny because you would think Twitter has these mistakes. YouTube doesn't, but everyone has these mistakes. Nonetheless, we are here and it's time to discuss what's going on in the world of Nvidia earnings. So let me pull up a quick clip. We got a lot to discuss, a lot to talk about. I just want to start off with a quick expectations clip on what the market is thinking or at least perceiving in the context of Nvidia. And then we are going to keep going from there. But that is where we get started today in terms of what we have to discuss. And then we'll get into Target, which is big news for inflation. So let me play this real quick, and then we will get started. Thank you, everybody, for being here. Let's get into it.
Now on the markets, Noah Blackstein, Dynamic Funds Vice President and Senior Portfolio Manager. Noah, good to have you with us. Good morning. So talk about the setup a little bit here. We've had this little, 8-week round trip in major indexes. You had the 5% pullback. We've come all the way back. Another scare that maybe the soft economic landing isn't going to be there or yield's going to run away from us. We settled back into a comfortable zone. How do you read the risk reward from here?
I think the risk reward is going to probably change over the next little while from our perspective. I think that this is a market where obviously we're quite confident we're getting rate cuts this year. Holds that.
Oh, sorry. This one's actually not talking about Nvidia. Never mind. See, even YouTube's messing up their titles right now. I thought this was actually a Nvidia clip. Okay, we'll get to the Nvidia clip in a second. We'll just start off with something else I wanted to say, and we'll keep going from there. Dude, when the analytics are messed up in the morning, it like makes everything so weird because it's like hard to track everything that's going on. It's like this is just the entire internet. Everything's just a little messed up this morning. All right, so let's talk about the actual Nvidia earnings right here, and then we'll keep going from there. So what is the market expecting for Nvidia? The market's expecting $22.8 billion for Nvidia. What are we at? May 22nd here today. $22.8 billion in EPS. Oh, wow. Never mind. Wow, the expectations changed, huh? Either that changed on the picture I'm looking at, or it actually did change unilaterally. $24.6 billion is what the market's expecting. $24.65 billion is what the market expecting. I thought they wanted 22. And EPS is $5.59. I wonder if analyst expectations changed over the past couple of days. That's interesting. So $24.65 billion. If Nvidia puts that up, then that's going to be pretty damn incredible. And most people are thinking Nvidia is going to beat that number. If Nvidia doesn't put that up, then we may have some more pain to go in the markets. Now, in the context of Nvidia, here's an incredible chart that I saw this morning that I want to show. Nvidia shares, despite a 7.5x since 2022, they are trading at the same PE that they were at when they were $110. And the only reason this is possible, as you can see, the PE of Nvidia all the way from October 2022 versus 953, still 37, is because the growth has gotten that much better. There's no way the stock could have gotten to 953 if the growth didn't improve, because then the PE would just be absolute insanity. But the PE has been compressed, the forward PE, because of the growth. So that has been very strong for Nvidia, and obviously the market has been able to reward them, given the stock has gone up 750%. Now, what happens if they don't crush earnings? I think at this point, this is just becoming something that's not going to happen. The more I think about where the market's going and how the market's going to be thinking of Nvidia earnings, if we look at Nvidia right here in the pre-markets, we're at 957. So market's getting even more excited. There is a 10% implied move, which is a $200 billion move to the upside or the downside. I think that 10% implied move is more like 5%. I mean, unless Nvidia absolutely crushes it out the gate, yeah, maybe you move up 200 billion to the upside. But I think going up 5% is not insane. But going down 10 or 15% is definitely possible if they miss the expectations, because then the argument is that, you know, their business is too cyclical. Right now, they have to prove they're not a cyclical business. This is a multi-year trend that's lasting, and then investors deserve to continue to reward Nvidia for the growth that they're putting up. And I think they're going to do that. I think it's very hard to imagine that they don't actually put up those numbers. And if they do put up those numbers in a meaningful way, then Nvidia is going to do very, very well this morning. As I'm Beneficial says, lofty expectations. That is correct. Trend position research says CUDA will crush in 2025. That is also correct. D Visual Arts, all you need is 5% to reach 1,000. That is also true. 5% on this bad boy gives you $1,000 a share, which would put the company at about a $2.5 trillion market cap, closer to $2.5 trillion market cap. And what's also going to be really interesting here is the split. Are they actually going to do a 10-to-1 split? And how does that 10-to-1 split going to be interacting with expectations around the actual stock? So I think this is going to be incredible earnings. It's going to be really, really exciting to see how earnings plays out. And that earnings is going to have a lot of implications, not only on the Nvidias of the world, but obviously also on the Pantries of the world, the Teslas of the world, all the companies that rely on Nvidia. I actually saw a conversation last night with Jensen Huang at Stripe, who was there a couple months ago, and he was giving a pretty, detailed explanation about where the world's going and how he thinks about Nvidia at the end of the day and their role. So it's going to be really interesting to see how he thinks they can perform in a world in which generative AI is, to his point, just getting started. Here's the clip I was going to show about Nvidia. So let's watch this real quick, and then we'll move on and keep going.
Whispered number on overall revenues is roughly about 26 billion. You look at that data center group, you're looking at that quarter over quarter growth. If you go and just look at it for this coming fiscal year or for NVIDIA, that number is expected to go from about 45 billion to over 90 billion in terms of total revenues. And we know, Frank, from the past that the real growth, as you know, has been coming from the data center group opposed to gaming. They have software, they have automotive and some other segments, but that's really where the AI has really been driving NVIDIA's growth. And, it's a huge number, but they seem to have been beating it over the last, 3 or 4 quarters.
Oh, but you didn't answer, Dan. So, I mean, is there something on the line here if it just falls just a little bit short? Does NVIDIA need to blow this number out in your mind, or is just a good report good enough at this point because expectations are so high?
Yeah, you're right, Frank. I mean, the consensus number, obviously they would, have to beat that. And, everyone's hoping that they're actually going to raise again going into the upcoming quarter. So I think just achieving the number at this point would be viewed somewhat as a disappointment.
Wow. A lot of implications when it comes to that. We've been talking about it. Really.
So again, if they don't beat those expectations, I do think there is some, broader market implications on the line. But I think we all know they're going to beat. Now the question is, how big of a beat is it? If it's a much bigger beat than we're expecting, this market is about to get very fun. If it's not as big of a beat as we're expecting, maybe this market takes a little bit of a breather. I don't think that the market necessarily declines, but I think taking a bit of a breather is not, the worst thing in the world, given the rally that we've had. But also, when it's a bull market, it's a bull market. And if the trend is aiming that it wants to go higher, then I don't think it's one of those things that we should necessarily fight, but rather embrace. And now we're just looking for positive affirmation across every different angle, like earnings, for it to continue to go higher. Okay, we got a lot of other stuff to talk about. Let's discuss. Let's do this story real quick. Actually, no, we'll do Target. There's another fun story, but let's do Target. and talk about that. So one of the things about Target that I think has been really interesting is that Target it's been struggling as a stock for a while, but it found some balance last year at the bottoms. I think the bottom was like 104 or something, or 105 or 110. And last week they announced that they had earnings today. Last week they announced they're reducing prices on 5,000 items. And no one really understood why they were doing that outside of the fact that, prices are starting to come down, inflation is starting to come down. It was kind of like a dog whistle to the fact that that's going to happen. Well, they're down 8% in the pre-market. I think they might be down now 10%. And the reason they're down is because they missed on their sales. Their sales are down 3% year over year. The quote is, the retailer saw consumers buy fewer everyday items like groceries and paper towels, along with discretionary goods like apparel and home decor. Why is this really good for inflation and the Fed? Target down 9.8%. Target is one of the leading retailers in the United States of America, along with Walmart. If Target is realizing that people aren't buying as much as they're buying anymore, to me, it's because people are tired of paying insane amounts for basic groceries, right? If you're not buying toilet paper and basic groceries and discretionary goods, hoodies, hats, shirts, it means that you're just tired of paying these excessive prices, which is why Target lowered prices on 5,000 items last week. They're saying, hey, if we don't lower the prices, people aren't going to come back. That's kind of the beauty of capitalism, right? You have a competitive environment. People are only willing to pay what the market is willing to give them to assess in sort of a fair market, or that's kind of like an efficient market hypothesis, right? What are you willing to pay versus what is someone willing to sell it to you for? And the best price versus the best ask comes together and you get an efficient price. And for so long, people were willing to pay higher prices on eggs and toilet paper and things of that nature. And now they're just not. And that means that, one, it signals a little bit of weakness for the consumer in that they just don't want to pay some of these elevated prices as much. But I think it's less about weakness for the consumer, because we saw Macy's was good, we saw Lowe's was good, Home Depot was good, and Walmart actually had good earnings. I think it's more so about the fact that at Target in particular, if they could get a cheaper set of toilet papers in Walmart, why would they go to Target, right? So the Target has to realize they can't keep price gouging, and those prices come down, and that's ultimately good for inflation. So I think we're going to see in the CPI over the coming months that if Target's lowering prices, then we should probably see services come down. Services is the highest one that we're seeing right now. Overall, goods should come down. Poultry should come down. Airline fares are already coming down. New and used cars are coming down. Insurance is coming, like everything. And then shelter is the big one. If shelter comes down, we'll check oil prices right now. Then we're going to have a little bit of disinflation. Wow. Shelter's down another 1% today. Or not shelter, sorry, oil. Look at that, 77 for WTI crude. If we get to 75 or below, we're going to see some decent disinflation or deflation in regards to oil, which is incredible. That will be absolutely incredible. So it'll be nice to see if that 1% on the day is nice, dude. It was down 1% yesterday. So let's see if we can keep that going. And it keeps happening. Not bad. If you are just joining, the YouTube analytics are messed up today. Twitter analytics are messed up today. I don't know what's happening in the world of social media. But the live viewer thing is wrong here. It's like messing up because I kind of keep track of that to switch topics and things of that nature. So that messes me up a little bit for the morning. And then Twitter, dude, I don't know how many people here actively use Twitter, but their entire analytics is just messed up. And if you go to the page, they're like, hey, we're under construction. I'm just like, okay, I guess. So it seems like they're rolling out a brand new suite of features for analytics. And YouTube might be doing the same as well. So a lot of weird stuff is messed up today on the internet. But NVIDIA earnings is tomorrow. And we will be discussing what happens in the world of NVIDIA earnings. It's X, yeah, that's probably true. It's X. I keep calling it Twitter, even though I've been okay with calling it X. Now Twitter redirects to x.com. So it's not literally Twitter anymore. It's just X. But yeah, they're going through a bunch of different issues. Okay, here's another news story. So that was the update on Target and what it means for inflation. The 10-year, let's check that real quick. Oil is coming down right now. 10-year, I think a little higher. Yeah, 10 years inching up just a little higher, 4.447 on the day. Another piece of breaking news, Vivek Ramaswamy, the former U.S. presidential candidate, is buying Buzzfeed. Or he's buying 7.7% of Buzzfeed. This is an interesting one, to say the least. And I think the reason he is buying Buzzfeed is because he probably wants a bit of a media arm and to take over a media arm. Buzzfeed's market cap is like $100 million. It's relatively cheap. Buzzfeed Media, for for those that don't know, they kind of have AI articles. They have these like pop culture quizzes. They kind of try to do investigative journalism, but I don't think they had like a couple stories last year that they tried to be like breaking news, but it's not really the thing. It is up 131% year to date, and I'm pretty sure you didn't know that. I'm pretty sure you didn't know that BuzzFeed is up 131% year to date. Here's Vivek on potentially why he's doing this right now.
And so I think part of what happens in our movement, so then when I run for president, people say, oh, but BlackRock started investment funds, and this guy also started the same kind of investment fund as BlackRock. Should we be suspicious? And at some point, we got to open our eyes and think, we're not going to win this battle as Republicans or conservatives, as pro-American patriots, if we just retreat from the terrain versus showing up and actually winning in the terrain that we need to reclaim. Right? I mean, I invested in Rumble. You guys familiar with Rumble?
Yes.
So you're on Rumble, I assume.
Yes.
Yeah. So I invested in Rumble back when it was a private company because I believe that you need actual challengers to YouTube, because one day it's going to happen. If it's not tomorrow, it's going to be years from now that somebody wakes up on the wrong side of the bed and decides that somebody who has identified or voted in the wrong election the wrong way or whatever is going to be deplatformed. We need competitive marketplace of alternatives. And so that's part.
So it seems like that's why he's doing this. It seems like he's buying this. He did say on the announcement that he's looking forward to meeting with the board of directors, and he believes the company is undervalued. Now, BuzzFeed is kind of a joke of a public company. I mean, if you look at their metrics, it is really disgusting when you look at what BuzzFeed does, because it's a media company that doesn't really create a ton of media. They are not growing year over year. They are not profitable. They lost $35 million in the last quarter. Revenue was about $44 million. They lost $35 million. I mean, $44 million as a public company in the media space is just like, it's not it, dude. It's not it. So I think it's a bit hard to imagine that BuzzFeed is going to do well. Now, if he were to completely change BuzzFeed, it's at 383 in the pre-markets. Wow, I actually didn't check the stock in the pre-market. It's pumping in the pre-market. Nvidia up as well. BuzzFeed, dude, imagine if this turns into a meme stock. Look at that. It's up 54% because of Vivek. Wow. 54% because Vivek Ramaswamy decides to put in, how much did he put in? Is it what? It's 7%. He probably put in less than $10 million into buying stock. That's incredible, dude. It's absolutely incredible. Robinhood, $20.84. We do have some big news on Robinhood as well. We'll talk about it in a second. But BuzzFeed right here, 389, up 55%. And I guess the reason that they're up is because of Vivek. The question now becomes, how much do people get excited about something like Vivek coming in? In terms of the overall turnaround, I think it's going to be hard for Vivek to do like a massive turnaround unless he fires everybody and kind of replaces them with people that that create like actual journalism and content and media. I mean, let's go to BuzzFeed's website right now. What does their website even look like? I don't think I've been to this website in a very long time, but here is BuzzFeed. Amid, is Airbnb a good buy at today's valuation? You know, I like Airbnb. I don't necessarily love the valuation, but granted, I don't know as much as I should know about the valuation. So I really can't fully say if Airbnb is a buy or not, or at least if I think it's a buy or not. But the company is phenomenal. It's absolutely incredible. It's just the valuation always been a little, but then I have bulls that say the valuation is cheap. So I don't know. Their free cash flow is phenomenal, but the price to sales has never been the most exciting. So we'll go deeper into Airbnb later because I've been thinking about that as well. But at this point, I think there's different opportunities that I like. Okay, so this is BuzzFeed. So they're talking about Ben Affleck and Jennifer Lopez. Also, one quick stat on this that you guys might not know. Ben Affleck and Jennifer Lopez historically have got together during bull markets and broken up during election years. It's the stat you didn't need to know, but that you now know. So they're covering pop culture. This is BuzzFeed. They're covering pop culture. I'm sure Vivek would want them to cover like politics and stuff. And so I guess that's what he would want them to do. But I don't know how you change a company like that in the culture that they have right now. So interesting thing from Vivek. We'll see how that one does, up 57% on the day. People seem to be excited about it. We'll see if the stock actually goes up and if that turns into a little bit more of a meme stock. Speaking of meme stocks, GameStop is down 1%. AMC is up a little bit. And then Faraday Future is down 10%. Greenwave is up 10%. Now, in terms of GameStop, our boy Robert F. Kennedy, who is running to be the United States president, bought $24,000 of GameStop yesterday. So his argument is that he believes he wants to band together with the apes to create greater retail transparency. We'll talk about PDD in a second. And have stronger regulatory oversight and tougher penalties for market manipulation and criminal behavior. So in too much action with words, I just invested $24,000 into GameStop. Let's punish predatory short selling to the moon. By the way, I ride with you and I'm not leaving. I don't know, dude. This is 2024 is becoming insane. Like, first of all, who would thought Roaring Kitty would come back for a week? And now he's gone, probably not coming back again. He hasn't tweeted in 2 days. And then Robert F. Kennedy would hop on the train and say, you know what? This is the most creative way I can market myself this political cycle. For $24,000, I can align myself with the apes. And that's what I'm going to do. So there you go. That's what you have in the context of GameStop. A big cringe, yes. Just a little bit cringe. Buzzfeed, where you need to scroll through 20 pages for them to get to the point of the article. Yeah. Look, the other problem with Buzzfeed is that what is the substance of the article that they're talking about, right? Like if you only care about TMZ, gossip, celebrity stuff, yeah, there's a market for that. But I don't think Vivek cares about that. So it's interesting to see how he plans to potentially turn it around and do something different as well. Okay, let's talk about PDD. These guys crushed. So Pinduoduo is up 7% in the pre-market. And why did they crush? They beat all expectations out of the water. So these guys beat on EPS. Let me just pull it up right here. And they beat on revenue. And they kind of are signaling that China might be back. So they beat massively on EPS. Expected 142. They beat by 283. So they beat by 99% on EPS, earnings per share. Revenue, market wanted 10 billion. They put up 12 billion. So they beat by about $2 billion. It's really interesting to see what's happening in China right now and the momentum that's happening across the entire board. Alibaba, I think they might be up on this news. So Alibaba's down a little bit in the pre-market, but they're up about 27% year to date. Month to date. Neo is up a little bit on this news. And then you got PDD that's up as well. So Pinduoduo, one of the larger companies in China, it's, compared to not Alibaba, but it's compared to a company that has the potential to one day become as big as Alibaba or even bigger. I mean, the market cap already, 202 billion, I think is a little bit bigger than Alibaba. Alibaba at 209 billion. Okay, so just about the same. So it's definitely a big company. People arguing, that it should be a company that should be much more valuable than it is today. Same thing with Alibaba. But the problem is China is holding it back in terms of the geopolitical risk that exists. Now, what's interesting about PDD and what's interesting about China is that China, as we talked about on the channel, is opening up a lot of liquidity. They're reducing the ratios that banks have to be able to loan, and they're raising equities by selling bonds. And they raised about $287 billion of equity or of bonds back in February. So we're seeing China tell the market, hey, we're ready for business. We're open. We need you guys to come in and invest. It's just a question of how not skeptical are global investors going to be when it comes to actually coming into China and giving them a meaningful part of their portfolio. So we'll see what happens there, but that's what we've got going on right now in the context of China and PDD. So we had Target that had kind of crappy earnings, and then PDD that had relatively good earnings today. And then we had BuzzFeed go up 100%. And that's what we saw this morning, at least so far in the pre-markets. Nvidia right here, 957 as well in the pre-markets. S&P 500 at 530.41, still holding on to the 530s. Robinhood, Palantir, $21.18. Tesla, we'll talk about them in a second, 183.10. And they got revenue up just a little bit in the pre-markets as well. Okay, let's talk about Robinhood. Robinhood is $20.86. What is going on in the world of Robinhood? Something is pretty damn interesting that happened last night, and I definitely want to ask you guys what you think about this. Robinhood reduced all their margin rates last night, and this made a pretty big wave in terms of how people have been thinking about this. So they have now lowered their margin rates. The lowest you can get is 5.7% if you're borrowing $50 million from Robinhood. People are like, who would borrow $50 million from Robinhood? There are some people, personally, I know some people that have put in tens of millions into Robinhood, and they got their friends to put in tens of millions into Robinhood. And the reason they did that is because of that 1% match. So, I mean, there are people that do have big money in Robinhood, but for the average person, 6.75% to borrow $50,000. Now, I have never taken out a margin loan. I have used margin to collateralize cash secured puts where you pay 0% interest on that money. But I've never like borrowed 50,000 and paid a percentage on it. For regular users, margin used to be 12%. And then for gold, it ended up becoming 8%. Now, across the board, it's 6.75%, which is the lowest rate in the industry. The only competitor that's even like trying to compete with this is IBKR, Interactive Brokers, where they have rates at about 6 and 5% as well. Charles Schwab, 13%, Fidelity around 12%, E-Trade 11.8%. Like all the competitors are relatively expensive. You can look right here, Schwab and TD. And so my question to you guys is, how many people here use margin, right? Like how many people actually engage with margin? But also, how are these rates attractive? Now, I know margin is like a dirty word. As you can see right here, Schwab 11.75, and then Fidelity we got here at 13.5. But if you understand margin, right, it's not the craziest thing in the world. Like if you know how to actually borrow money and then pay the interest and then use that money to be able to do what you need to do in increasing your buying power. Like if you're more sophisticated, margin is not that scary. If you're just like a gambler who borrows 50,000 to like go bet on GameStop, then yeah, it can get really bad. And you probably can't borrow 50,000 unless you have collateralized enough assets to be able to borrow that money. So that's one of the things that helps with delinquencies on margin is that you can get margin called in Robinhood. Any brokerage can get their money back. But I am curious how many more people would come to Robinhood, how many more people would use this platform as a result of the fact that these rates have gotten as low as they have been in the entire industry. I mean, it's really interesting to see how Robinhood's working here. And again, one of the things about Robinhood doing this is like they're finding new ways to just innovate. And so some people are saying, well, this is going to hurt their earnings because last month they made 72 million, or last quarter they made 72 million off margin, and now a margin interest off like $4.1 billion in margin balances. And now that interest will go down materially in terms of the rates. I agree. The thing is, it looks like, and again, Robinhood's very data driven, their volumes on margin are going to go up substantially. And in fact, they're probably going to bring new net deposits. I mean, there were people under my posts yesterday saying, look, I am absolutely leaving Schwab and Fidelity. I'm taking advantage of that 1% match. This is the final thing I needed to move over, because when someone's giving you $1 million at 6% and you get 1% just to move your brokerage, it kind of becomes a no-brainer, dude. Like it just, at that point, it's just, okay, do I hate Robinhood or not? If I don't hate Robinhood, then all right, here we go. And the product being good helps to keep people to stay on the platform. So I think they're just finding new ways to get more and more whales onto this app. And the more people that come onto this app, the more people that end up using the product, the more Robinhood drives revenue as well. Franz Baker says, I use margin for selling puts. IBKR is a 10% cushion warning. It's fairly safe if you can just sell some stocks or add money well in time. Yeah. And look, if you get assigned those puts and you have cash in your account, you know, your margin isn't used. They just take it from your account, which means you never end up paying the interest itself. So if you have enough cash to be able to borrow against your assets and use that margin as collateral, I think it's not a bad idea at all. But if you actually borrow 50 grand and for Robinhood, you would pay like 2,000 a year or something, or not about 3,000 a year. You could pay that 3,000 all at once if you have the cash. Borrow the 50 grand, use the 50 grand to do what you need to do, and then pay the 50 grand back. Now, that involves you knowing what to do with the 50 grand, right? Being able to get a return on that exceeds the rate of you borrowing, which means you have to get at least like a 7% return if you're borrowing at 6%. Most people shouldn't do it. But the point is, for those that really do engage with margin and understand how to do it, which means, you know, people with like high 6 digits, 7 figures, this might be a catalyst for them to go to Robinhood. Bask already says, I will move my old 401k from Vanguard to Robinhood in the next 30 days. Yeah. And you're going to get a 1% match on that as well. So I do think it makes a lot of sense at the end of the day. Real Baby Pluto says, so what's the point of using margin for selling puts if you're going to put the money aside anyway? I never really understood that when TJ talks about it. Basically, if you have a brokerage account of 500 grand and you are granted the margin of like, you know, 350 grand, you can use part of that 350 grand to collateralize your puts and use the 500 in cash to actually buy equities. Now, you're not going to use all 500 because then you wouldn't have any cash to build against your margin that's granted to you, but you still free up more cash at the end of the day, right? It's not free money, but it's as close to free money as something I've ever seen. If you have cash in your portfolio and a brokerage offers you more cash, you can use that cash without having to pay them interest on that cash to collateralize cash secured puts while using your actual cash to go buy. You can't use all of your cash to buy because you obviously need to have some cash left in the brokerage and some stocks left in the brokerage to be hedged against your margin. But still, it frees up a lot of cash at the end of the day, right? And so if you can use your money to go buy something else while using the brokerage's money to use as collateral, because technically you're not borrowing that money at the end of the day, then it's a pretty valuable proposition, I think, to more advanced traders. And if you're actually borrowing money, again, I think that's where Robinhood looks really exciting for people as well. And you can just roll it to prevent assignments as well. Yes, that's correct. Rolling doesn't always work, but if the stock doesn't fall 30-40%, you can roll it, right? Now when a stock falls 30-40-50%, your roll becomes irrelevant, because there's not going to be any premium for you to roll into unless you just go way far out. But I mean, if the stock stays range bound, if it just doesn't get above your strike within 10 to 15%, there is a relatively easy roll you can do to avoid assignment as well. 1K is interest free with Robinhood. Yeah. Also, dude, they've been doing a promotion where $2,000 are interest free on Robinhood. I've been seeing some screenshots where people are like, look, I get $2,000 free with no interest, which means you can borrow $2,000 and you can pay it later and you don't have to pay anything to borrow the $2,000. I mean, that's just like, they are pulling out every single stop in the book because they know it's a bull market. They understand the time is now to capitalize on it. And they're doing whatever they need to do to get people onto that platform. And they're doing it profitably, which is the exciting thing. Speaking of Robinhood, Citadel Securities just posted $2.3 billion in trading revenue for Q1. This is up 68% year over year. It looks like the markets are active and people want to deploy capital. And unless we have a black swan event or something, Nvidia just absolutely craps the bed, people are ready to put money in the markets. Tomorrow's money market fund update is going to be incredibly interesting, because if we get an increase, that just means more and more money is being held on the sidelines and it's waiting for that rainy day. And we get 1 cent of a dip, 5%, 6%, that money's probably coming in. If we lose money from the money market funds, maybe it means that people are just getting ready to get more excited about what's going on in the broader markets. Here's Bank of America. They believe that this bull market is intact and it is likely going to last for a while. Let's get their thoughts and then we'll keep going from there.
Steve Suttmeyer, Chief Equity Technical Strategist at Bank of America Securities. Steve, good morning. Good to see you.
Good morning. Good morning.
I guess making new highs for an index, one of the most bullish things it can do, tends to be something that has positive forward implications. But what do you make of the rally that we've had off those lows in April? That's up 7% or so, whether volume,
Right.
whether breadth, whether the composition of the rally suggests that it can last or not.
Well, I think first and foremost, we are about to enter one of the best seasonal periods of the year, June through August. So if you think about all years going back to 1928, the S&P is up about 2/3 of the time, 3.2%. During presidential election years, that's on steroids. S&P 500 is up 75% of the time, June through August, 7.3% average return. So with new highs coming, we think they can continue. But you're right. I mean, we got market breadth. Advanced decline lines actually broke out in advance of the new highs on the S&P, NYSE, which is important. We look at cumulative net up volume, which a lot of people don't look at volume, but when you look at cumulative net up volume, which is basically an advanced decline line for upward volume or downward volume on an index, that also confirmed the highs last week. So I think that's very important and suggests that the rally should continue.
And what about the leadership, or whether there's sort of a shifting preference evident in the market here? You've seen things like commodity-based stocks
Right.
running with metals and
Yep.
and you see on the other side, banks doing well and utilities. So it seems a little bit of a grab bag. It's not the old, big cap growth leadership.
And I think that's great. We really need to see that. Quite frankly, shifts in leadership do help markets go higher. I will say, though, we think that on an absolute basis, you can get breakouts for the small cap index, for instance. You can get breakouts or continued upside for the equal weight S&P. But we don't know if that leads. I mean, the relative trends versus the S&P, meaning how they perform relative to the market, are still down in the doldrums, still trending lower. So there's a chance here that even with this broader participation, it still could very well be more of a mega cap market. It could still be more of a growthy market. And we'll learn more about that, I guess, this afternoon with the Nvidia earnings. Yeah. But I mean, that's the way we're set up right here, right now. And it's not only in the U.S., it's global. You got breakouts in Europe confirmed by advanced decline lines. Japan has corrected a little bit, but prior to that, the advanced decline lines are going to new highs. So it's a global bull market right now.
And what about China? A lot of excitement over the
So I think he's right, man. It seems to be a pretty interesting global bull market, and we're getting a bit of data across the world for why it's a global bull market. So let's look at some of the global stats that we have going on right now. across the world. So first of all, let's start off with South Africa. South Africa's inflation rate eased for the second time to a 4-month low of 5.2%. So we're seeing a little bit more of inflation coming down across the entire world. Now in the UK, was it the UK? I think in the UK it actually went up a little bit today. So in some other parts of the world it was a bit higher. But we did see South African inflation moderate a little bit. Yeah, in the UK the annual inflation rate eased to 2.3%. Which is above forecast of 2.1%. So people thought UK inflation would be 2.1 versus 2.3, but it's still close to 2%, which is why the Bank of England believes that we will definitely see a rate cut coming up soon. Second of all, in the United States, mortgage applications are up 1.9% week over week. These are at a 3-week high. Average, obviously, mortgage rates right now are above 7%, but it is nice to see that mortgage applications are increasing with an idea that people feel rates are coming down or that they feel comfortable refinancing or that housing prices in general are starting to come down a bit so they don't feel as scared to get into the market. Once rates come down, Lowe's, Home Depot, all the companies that sell products to get into homes, I think are going to do very well because just home supplies in general are going to go higher as people, I think, finally say it's time to buy a house if we get 25 to 50 basis points down this year, or people will finally be selling at cheaper prices, which will get more buyers into the market. So that's going to be interesting to see what's happening as well. And then the EU, in the European Union, passenger car registrations went up 914,000 units. So we had 914,000 cars sold throughout the entire EU. That's up 13.7% year over year in the month of April alone. Now, this transitions us into the Tesla discussion. Tesla had a very interesting day yesterday. One of the bad pieces of news this morning for Tesla, which is why it is down 2%, is that in the EU, given we're speaking about Europe, Tesla sales fell to a 15-month low. 13,951 vehicles out of the 904,000 we just talked about were Teslas. Tesla's down 2%. Now, Tesla was up 6% yesterday. I think it was up almost 7% after hours. So we saw a lot of momentum in Tesla. And one of the reasons for that, I think, was because Pepsi announced that they're doing this like new deal where they're buying more semis, or they announced it in 2017, but they're saying they're ordering more semis. And that was kind of the argument for why people thought it was up. Also, an argument was that this new video came out explaining what the robotaxi would look like. If you guys saw that video, let me know if you think the robotaxi video was interesting or not. I think the robotaxi looked interesting. It kind of feels weird how they are creating the compact box design, but at the end of the day, when we actually see it, and it seems like based on that video that they showed and how you could kind of stitch together the parts of what the robotaxi looks like, it seems like definitely on August 8th, we're going to get the design. Like it would be insane for us to not get the design of what the robotaxi looks like, especially if they want to get it rolled out by the end of 2025. So I think we're going to get the design. And if yesterday was any indication of what the design looks like, there's definitely not a steering wheel and it's this compact box. Some people were saying that's the reason the stock is up 6% yesterday, because more people are realizing that FSD is becoming real and that if the robotaxi is getting ready to get into production, FSD 12.4 is getting into prime time, people end up buying the stock. So that was one of the reasons I think that people thought that Tesla was up yesterday, but it's down 1.5% right now on this Europe argument. Again, the Tesla sales are horrendous, dude. It's just bad. 13,000 cars in the month of April for all of Europe. That's like a 15-month low. It goes to show there's either a problem with EVs in terms of the sentiment, or people just don't want to buy Teslas there. Or again, rates are high across the entire world and people don't feel like financing a Tesla. But the one counter argument to that is that if you can buy a Tesla, you probably have the money to pay the interest, right? If you're paying that much for a car. So you can make a variety of arguments for it. At the end of the day, I think that robotaxi is going to be the most exciting part of the summer for Tesla. And maybe the stock is primarily rallying on the fact that if we're getting close to the robotaxi, then we should be getting close to what Tesla does in regard to their rollout. Tesla's going for volume on rides. Yeah, it seems so. I mean, it seems like they're definitely not going for volume on cars. And it's not really their fault, by the way. Like they talked about hybrids becoming a more industry trend. Like a lot of things are changing that they can't control, but going for volume on rides is going to be even more profitable than actual deliveries themselves or cars themselves. So we'll see how that plays out. Netherlands is cutting out tax advantages for EVs. Wow. You see across the world. I didn't even know that there's different things that are happening that are disincentivizing EVs. And that is not necessarily the best thing for a company like Tesla. Not to mention all the BYD competition that's going on in China right now as well. So we will see how this stuff plays out, but Tesla is down on those April sales currently in the pre-markets. Uber, let's check on Uber. Uber is up a little bit, 0.62%. Uber has had a rough past couple months. I mean, let me go to Uber year to date. I think Uber is still up, but ever since the Tesla FSD thing has started to become more real to people, yeah, it's up 10% year to date. That's still pretty good. That's not bad. But here in the past 6 months, it's up 15%. Past 1 month, yeah, that's what I thought, down 7%. And then past 5 days, it's down 3%. Over the past year, it is up 63% because it kind of stayed flat from $40 to $50 after the pandemic and really didn't find momentum. And then it really started to break out as it got included into the S&P 500. I am still of the opinion that FSD is a long time away from killing Uber. Maybe it makes it a little difficult for their business, but until FSD is like legit, I get into the thing and it takes me to wherever I want to go, you're still probably going to call an Uber, dude. And that just means FSD has to be perfect. Now, the argument for Tesla, the bull case, is that if they're getting ready to roll out the robotaxi, FSD is damn near perfect. And 12.3 has been very good. People have tried 12.4 on a beta. They've said that's even better. 13, Elon has said 12.5 is basically 13. And he says 13 is basically going to be 14 in terms of the versions. So if he feels that confident on it, maybe that's also why the market's giving a premium to Tesla. Yeah, Tesla now dropping a bit more, down 1.98% in the pre-market. Breakfast Pizza says it's legit soon. I use it 99%. Yeah, and most people are saying that. So that extra 1% is what's needed to get people to order a robotaxi over an Uber. But once that 1%'s there, it seems like it's game over. The question is, how long does Uber have until that happens? Or does Uber license their own version of FSD and just turn the cars into robots themselves, even if they aren't using Tesla's FSD? And I know there's a lot of complications there, but that's something to think about, I guess, if you are long-term and thinking of what happens with Uber. Uber is just so global, in my opinion. Like, even if Tesla FSD is perfect, like Uber in, Sweden, I don't even know if Uber's in Sweden, but Uber is, I think, in 168 countries across the world. They're not going to be replaced that easily, if FSD is not in Sweden, for example. So one thing to think about in the context of where Uber is going. All right, we got 2 minutes until the market opens. Apple's at 192. We got to talk about Apple. They had some interesting updates yesterday. Microsoft announced a ton of AI features. They're at 430. PE of 37. I think the reason Microsoft has not been moving over the past couple of weeks is because it's kind of priced in a lot of the growth, and the market's definitely given a nice premium to Microsoft. So Microsoft, we've seen stay relatively flat, but not really breaking out of that 430 range. Google right here, 178 in the pre-markets. Meta at 467. We have more to talk about on Nvidia. This is going to be one of the most interesting days in the markets. I'll be live at 3:45 p.m. and we are going to see how Nvidia pulls this off. I think they're going to do well, but it's just going to be interesting, dude. It's going to be so interesting because if they really beat, things get excited, and if they slightly beat, maybe things stay flat. If they miss, then things get tough. But we're going to see how it operates today. I see a Tesla Uber partnership. I think that is very possible. They might both just say, you know what, Uber, you have the users, we have the technology, let's just band together. I think that's possible, but it would be up to Elon to see if he thinks if there's value in that. All right, it is Wednesday, May 22nd, 9:30 a.m. Thank you, everybody, for being here. The stock market is now open. Wake your ass up. Here we go. We are back and ready for the market open. Nvidia opens up green, 954 on the day. Not bad at all, up 0.11%. We'll see if people start buying it going into earnings. 345 is going to be exciting for Nvidia. GameStop down 2.48%. Tesla down 2%. Microsoft up a little bit. Google down 0.5%. Meta 468 up about 1% on the day. Uber up 2% on the day. Pinduoduo, wow. Holy crap. These guys were up 6%. Wow, they just got everyone sold the news. Incredible. Pinduoduo was up 6%. That's incredible. They just lost everything they got on the game. Dude, they beat EPS by 99%. They beat revenue by $2 billion. Wow. This is the problem with China, dude. Maybe people sold it off because they were like, at the end of the day, it's still China and we're going to take our money and run. We'll go back to that one. I want to see if that rebounds. That one I did not expect. NIO flat on the day. Alibaba down 2%. Maybe there's something going on with China. Alibaba should be up on Pinduoduo's earnings, to be honest. Alibaba shouldn't be down. That's very weird. GameStop down 3.4%. Robinhood $20.94 down 0.12% on the day. Buzzfeed is up 60%. And if you're wondering why, Vivek Ramaswamy, former U.S. presidential candidate, has bought 7.7% of Buzzfeed. Why is he doing it? Honestly, I have no idea, but it cost him like $7 million, $10 million. It's been so cheap. So maybe he's thinking of being like an activist investor here or something. But Buzzfeed right here, up about 60%. SMCI up a little bit as well. Lam Research, they did a 10-for-1 split yesterday, something that people are saying maybe NVIDIA does, maybe 10-for-1, 5-for-1. I think NVIDIA did 10-for-1. It would be incredible. 2.5 billion shares would turn into 25 billion shares. So let's see if that happens. HIMS is down 3%. Bitcoin, 69,800. Bitcoin had a big day for inflows yesterday as well. Another $300 million flowed into the ETFs, and GBTC Grayscale did not sell any Bitcoin. So although it's down from that 71,000 level, it has been doing incredibly well. Ethereum, those spot ETFs are getting Ethereum more excited. They have not given up their 20% gain, still at 3,700. And it seems like the market, even though Bitcoin is volatile, is ready to continue buying Ethereum because they think when the ETF gets approved, then Ethereum is going to have nowhere to go but higher. Intel at 32, Ulta Beauty 381, ELF today after the bell. We got ELF at 158. So we're going to see at 4 p.m. what ELF says and what Snowflake says. Lululemon, did they have earnings today? Lululemon is down 5%. Did they have earnings? Lululemon. No, they didn't have earnings today. Why is Lululemon down 5%? Interesting. Let's do a quick search on that one. Lululemon. This one fell hard after earnings. So that was something. Oh, so Jeffries put out a report that says Lulu's business will crash next year. Okay, so they got downgraded. They got that's I guess there you go. That's see these banks, they say one thing about it. Their business will crash next year. I guess they're thinking that people aren't ready to pay $120 for like sweaters, and that's what's going on with Lulu. We'll go back to Lulu, but they're down 5% right now as the market opens. Alibaba 84.13, Pinduoduo, now it's green, now it's up 2%. So we had a 6% pop in the pre-markets, then we fell about 1%. Now it's up 2%. So people bought a little bit of the dip. Oracle 125, Amazon 184, Apple 192, Rocket Labs at 440, Rivian at $10 at a $10 billion market cap, trading just above cash. I think they have a cash about $9 billion. They're trading at $10 billion, so $1 billion above cash. And then Nvidia right here at $9.53 on the day. Palantir is green, 21.31. So not bad on Palantir. Seeing a little bit of green momentum there. Palantir probably going to be flat given how the price action has gone over the past couple of days. We'll see if momentum comes in. Volume is definitely drying up for Palantir. They have 1.24 million shares that have been traded. Now, that's a lot for most stocks. For Palantir, it's not really that many. So I think people are just like kind of, they're wait and see with Palantir. They're not really caring that much about what happens to the actual macro environment right now. They're waiting more for company updates. One update from Palantir: Karp did offload 325,000 shares yesterday. It was a scheduled sale, so he did sell 325,000 shares, and I think he acquired some RSUs. So a lot of the selling Goldso had to do for paying for the taxes to be able to sell those shares or to buy his new options. So that's one update we had yesterday. And second of all, I put out a video responding to the Guardian article. I don't know if you guys read that, but it was basically a hit piece on Palantir. So I put out a response yesterday on what I thought the article got wrong. And if you guys want to check that out, you can check that out as well. So we got Palantir here at 21.27, Amazon 184, Apple 192. If you're just joining, we talked about Robinhood lowering their margin rates. Robinhood right now down 1.29% to the lowest in the industry outside of IBKR, around 6.75% to borrow $50,000. So that is one catalyst people are expecting will bring in more money onto the platform as well. Faraday Future down 14%. Greenwave is up 2%, and GameStop is down 4% on the day. Qualcomm is slowly breaking out all-time high. Did they have earnings? I feel like no, they didn't have earnings. But there was some piece of news I saw about Qualcomm that I might be forgetting right now. But they are hitting a bit higher. Let me pull up a couple of things right here. Yeah, I'll see if I can pull up a few things. Oh, wow. Citi downgraded HIMS to neutral from buy, but they raised their price target for $220. Okay, so they didn't really downgrade. They said it's not a buy anymore, but their price target is $20. And so Citi has HIMS at 20. I think another company upgraded them as well to close to 30. And so HIMS has been benefiting from the GLP announcements as well. Amazon has done some very interesting things. Let me pull up their newest Amazon Alexa subscription thing that they outlined this morning. So here, let's get an update on this, and then we'll keep going from there. They're planning to give Alexa and AI overall. Also, put in the chat, who uses Alexa every day because I haven't used Alexa in like 5 years. But let me know if anyone here actually uses Alexa and if you would use new AI features on Alexa.
Developments on Amazon's AI strategy. Sources tell CNBC the company is planning an AI-driven overhaul of Alexa. Kate Rooney joins us now with the details. Morning, Kate.
Good morning, Mike. So yeah, Amazon does plan to give Alexa, its voice assistant, a major AI overhaul this year and add a monthly subscription to offset some of the costs. This is according to people familiar with Amazon's plans. Those sources telling me the company is planning to unveil a new version of the now decade-old voice assistant later this year, which would potentially position it to better compete with new generative AI-powered chatbots. Think of OpenAI and what Google's got out there. Sources tell me this is not going to be part of Amazon's Prime subscription, but a price point has not been decided yet. And then while Amazon wowed consumers, if you think about Alexa's voice-driven tasks back in 2014, it is seeming kind of old, a little bit old-fashioned amid the recent leaps in what we've seen with artificial intelligence. Last week, we had OpenAI announcing its latest version of ChatGPT that can go significantly deeper than Alexa. For example, it can translate conversations into different languages in real time. And then Google launched pretty similar AI feature. People still, for the most part, are using Alexa and Apple's Siri, we should mention, for much more basic tasks, things like setting a kitchen timer or announcing the weather. Sources tell me the development of new AI chatbots in recent months has increased pressure on the Alexa division internally at Amazon, which...
The thing about Alexa, dude, and I don't use it at all. I would never use Alexa. I see some people in the chat saying that Alexa, they do use Alexa. I use Siri to like schedule stuff. We got Unbeneficial who pointed this out in the chat. AKTS, another looking like meme stock, up 248% on the day. I tend to use Siri to just like schedule basic things like, hey, remind me about this, remind me about that. But I never set it up via Alexa. And maybe because I'm not integrated that much into the Amazon ecosystem. Nicola, hello, everybody. Nicola, thank you for being here today. I see a lot of people say that their kids use it. Dominic says, my mother uses it. Spencer says, my sister uses Alexa and Siri for everything in her life. Everything. Wow. Dude, I use Siri to ask math questions sometimes. Amazon is up on this news, as you can see right here, 185. But that's pretty much it. And I use it to like schedule meetings. Like I just say, oh, or not schedule. Even I was like, hey, remind me about blah, blah, blah. That's it. And it's really good at that. It's very good at that. Tom Brady uses Google Home Assistant. Brian says, my kids do. Someone says my 7-year-old does. But I've never used Alexa. I mostly use it for timers. Yeah, that's interesting. My wife's boyfriend uses it. That's very interesting. Claudina says I use Google. I never use Alexa. But Amazon right here pumping off this news. Now, I wonder what AI features they're really going to apply to make that thing something people really care about using every single day. But that's something that is a catalyst for Amazon at the end of the day, given they can make it better because they already have it in not hundreds of millions, but I would argue millions of homes in the United States. Nvidia 944 down 1%. So seeing a little bit of a dump. I actually would like to see Nvidia fall 2 to 3% before earnings, just like it did last time, because then the expectations aren't that crazy. But if Nvidia's at like 967 before earnings, dude, they need to demolish earnings to see some upside momentum. And if Nvidia's not, Nvidia's at 900 or 920, maybe it's a little bit easier for them to go to the upside. And so psychologically, it would be nice to see them come down. Now, granted, if we want the market to push higher, we want this S&P to actually get past the 530s. Right now, we're at 530.85. We probably need Nvidia to really crush, no matter what price it's at. And so we'll see. We'll see how that one plays out. Benny says, of course, when I saw Amazon yesterday, this news comes out. Well, this news is interesting, but I don't know if this necessarily increases their earnings, dude. I mean, they've got to prove a lot because the market, Amazon is one of the more expensive on a PE basis. Max 7's at 44. The other ones are in the high 30s or low 20s, or high 20s and low 30s. So they've got to continue to improve growth. Their operating income's going from 8% to 10%, I think was the biggest stat that people didn't talk about in their last earnings because that was the high since 2021. But I don't know if Alexa moves the needle on just like operating incomes, maybe on top line revenue, but the incomes that you want Amazon to be a profitable business. So much of their business is not profitable outside of AWS, which has always been the concern around Amazon. So we'll see how that plays out. But Amazon right here is stuck at 184. It tried to break all-time highs at 190 and just could not break through, got rejected there. Probably going to need another really solid earnings of AWS growth to get there. Google at 177, Meta at 469, Uber 65, Tesla down 3% of the day. For those that are wondering, their sales are down in Europe at a 15-month low for the month of April. They sold 14,000 cars, 13,951 in the month of April. And market does not like that. They're basically, the market saying, even though the market knows FSD is a story, I think the market's also just like, all right, you guys really are dropping the ball on these deliveries and betting everything on selling rides versus vehicles, huh? And so market's not the happiest about that right now, but it is up from yesterday when it was at about 175. Pinduoduo now up 4%. So that earnings drop we saw right as the market opened, people bought the dip, and as they should, they had a phenomenal earnings. So they are up 4% on the day. Buzzfeed is now up 72% after Vivek Ramaswamy buys a stake in Buzzfeed. The other interesting thing about him buying it is like they're not a political news organization. So if he bought like a stake in like the Washington Post or something, or the New York Times, which he probably never would, but if he did, you could argue him having some influence there. But for Buzzfeed, it's such a small pop culture app. I don't know what his plans are with it, just by owning it. Like what is he really going to do to make that app that much more, or that news product that much more exciting outside of turning it into a political app? But do people think of Buzzfeed with politics? Most people don't, right? So it's really interesting what he's trying to do there, buying up Buzzfeed. PayPal continues to decline, down 2.36%. I don't know what the hell's going on with PayPal, dude. It's every day, dude. I remember when it was stuck at like 53, 54, and every day we would just let out a big sigh in the morning when we looked at PayPal. It's the same thing now. It's just $10 higher at 62. So I don't know. They did do like a little bit of a convertible note the other day. I don't think that's that big of a deal. It's not something to necessarily get super upset about. It's not really dilution either. Even if there's like hints of dilution there. So I don't know. This one's stuck in the gutter a little bit, along with SoFi that has been a bit stuck. SoFi right here at 707. This one's just not moving, dude. SoFi is just like, it's just stuck, dude. It's just like, it's literally just stuck. It just doesn't move. And so the volume is crazy, dude. The volume is 3 million. This is why I say SoFi's cult is even greater than Palantir's. Palantir's volume is 2 million. SoFi's is 3 million. Now, like I understand Palantir has been flat for a little bit as well, but they're up 30% year to date. SoFi is down 30% year to date, and still 3 million shares have been traded in 13 minutes. And the prices, it just doesn't move. There's like just not enough buy side pressure to get this bad boy to the higher side. So I guess we'll see what happens with SoFi, but SoFi and PayPal kind of struggling a little bit or just relatively staying flat. Google 177, Meta at 469. We do have the Fed minutes at 2 p.m. Yup, those are going to be really big. Wow, they're on the day of Nvidia earnings. I didn't even realize that. So we have FOMC, we have or in terms of the minutes, then we have Nvidia, then we have Snowflake. Those are going to be 3 big earnings. Snowflake's going to be important for Palantir, and Snowflake's going to be important because they replaced the CEO at $230, $237, fell to $145. Now it's at $163. They, I think, are sandbagging their guidance at 22% year-over-year growth. They just released a new Arctic LLM open source model that I don't really understand what's the reasoning behind it. They're looking to buy a company called Reka AI for $1 billion. I mean, I think there are so many things that are wrong with Snowflake, but I also think it falling as much as it did because Frank Slootman left is likely not warranted if the growth is going to continue. The thing is, the market cap is still $55 billion. Dude, it's still more expensive than Palantir on just a pure market cap basis. Like, it's still valued more richly than Palantir, and they're not profitable, right? Or on a gap basis. So there are reasons to not like it, but I do think it's due for a bounce, just given how badly it fell after earnings, after the CEO left, especially if they really underpromise and overdeliver when it comes to their guidance, and if they beat on their guidance today. NVDA is right here, up 4% on the day as well. So if Snowflake beats on guidance, maybe that's good for the entire SaaS industry, and that helps Palantir. But that's going to be a big one along with Nvidia. Maybe they're also, Snowflake and Nvidia have partnered before in the past. You never know. Maybe they announce a little bit of a partnership, and that gets the market excited as well for Snowflake. Tesla now down 2.66%. Alibaba's down 2%. Faraday Future down 17%. AMC is down 1%. Let's look at some of the DGen portfolio. We haven't gone to that in a second. Space is down 1%. Beyond Meat down 1%. Save, Spirit Airlines down 1%. Plug Power is up a little bit. BlackBerry's up a little bit. Reddit's down 1.45. DJT produced revenues of $700,000, lost $320 million yesterday. $7.44 billion market cap. They are down 5%. GameStop's down 1%, and AMC is down 1% as well. How many hours till the earnings report? It'll be at 4 p.m. So we're looking at about 7 hours, and then we'll see what happens with with NVIDIA, dude. It's going to be exciting. It's going to be a movie, dude. It's going to be exciting today. It's going to be very, very, very exciting. Let's go to some of the Bitcoin stocks as well and see what's going on. Maybe some Bitcoin weakness is hurting some of those stocks today. MicroStrategy, yeah, down 1%. Robinhood down about 2%. Bitfarms up 1%. CleanSpark, CleanSpark's actually up a little bit, 1.4%. Coinbase is down. So Bitcoin falling just a little bit this morning, which is why we're seeing a little bit of weakness in the brokerages, but the miners are doing okay and up a bit as we get into the morning. PDD is up 4.5%. That is correct. PDD is up. They had incredible earnings as well. I think the other thing about NVIDIA earnings are going to be like, what does Jensen say about the future of GPT? Because people really listen to him when he talks in regards to how he thinks of the future of generative AI. And if he says, hey, like this thing really isn't stopping, and I know he's going to say something like that, but if he, if he is able to convince the market that this is something you have to take seriously, you're just going to get this all wrong. Maybe the market just FOMOs in even higher at all-time highs and says we're buying NVIDIA. Here's one analyst on why NVIDIA sell-off could be an opportunity if things go down.
Semis, the chips, the whole of tech, or is it the whole of this market?
Well, so the utility names that have been really the ones in the firing line for people buying right now have been the ones that are more IPPs, that are more independent producers, that have the ability to really lean into the AI theme. And that's really brought the entire utility market up. I actually think this is one of the sweet spots of the markets. Utilities have been under-owned for a very long time throughout most of last year. They've underperformed pretty significantly. I think now with rates starting to peak and with the Fed likely starting to cut at least towards the latter part of this year, utilities look really attractive. That said, yes, if Nvidia goes down today, the whole market's going down. I think that that's probably a short-term dip, and you likely buy, because right now it's just about playing the expectations of the rollout of the next chip and the GPU for Nvidia versus what we know is going to be a very strong earnings picture over the next couple of years for the company.
I'm hoping Jensen Huang actually clarifies how you pronounce the name, because I hear people say Nvidia and I hear people say Nvidia.
Bro, how are you on Bloomberg television? It's Nvidia. And Huang? Did she say Huang, dude?
Because I hear people say
For the next couple of years for the company.
I'm hoping Jensen Huang actually clarifies.
What is going on with Bloomberg, bro? First of all, it's Huang. It's not Huang. And it's NVIDIA. We all know this. The only people who say NVIDIA are people that have like $2 in their brokerage account, dude. I'm not like, and that was me 2 years ago, dude. Like, if you say NVIDIA, you're just like, no, you're wrong. Like, it's NVIDIA, bro. It's like, what is going on here? Bloomberg television, huh? Bloomberg. I hope Jensen Huang tells us how to say the name of his company that's worth $2.3 trillion that I'm supposed to be analyzing on Bloomberg television every day, but I can't say the name right. That's incredible, dude. That's incredible. I had to roast her for that, dude. I had to roast her. That's ridiculous. I mentioned yesterday that Target cutting the prices on 5,000 items is seen as a possibly desperate move and not a positive one. It's desperate for their business, but what I would say about Target, which is taking a dump right now, down 9%, Walmart had great earnings. So when people say, Target is in the gutter right now and like them decreasing sales is bad because it means the consumer is weak. Yes, to an extent. But if Walmart has consumers buying their items, it means Walmart's just beating Target at their own game. And Target finally realized they have to decrease prices. And I've noticed this myself, dude. I shop at Walmart and Target. Target every time is more expensive than Walmart. Like, Walmart is the cheapest stuff you can get on the planet, at least in America. So I think Target realized they can't just keep price gouging people, which is why they're down 9% and they're lowering prices. But I don't think it's necessarily consumers are weak. Yes, consumers are getting weaker, but if they're shopping at Walmart, then it means that they're just picking other places to shop at. Amid telling people how to pronounce things really is stranger than fiction. That is kind of crazy, right? If I have to help you pronounce something, given my string of pronunciations, it means you're really messing up in pronouncing something. So that is a very good point. There are a plethora of wrong pronunciations out there. We haven't used that word in so long. I'm so happy you brought it up. There is absolutely a plethora of wrong pronunciations. Claudina says, I can't stand when they can't pronounce the damn stock. Yeah, to me, dude, I don't care if she can't pronounce it. I'm just like, you're on Bloomberg, dude. You're in this fancy studio. You have all these lights. You have a makeup team. You have all this shit around you. And you're like, I hope Jensen Huang can tell us how to call First of all, dude, if any analyst asked Jensen Huang during the earnings call, hey, how do you say the name of the company? like it would be the most embarrassing thing. So like, I hope someone asks him, like, what analyst in their mind, in any sense of the imagination, would ask how to say the name of the company. First of all, why would you even waste your question on that? Like, that's just crazy, dude. That's crazy. Okay, Shopify. Shopify has started to bounce higher. So TJ and I, we sold a bunch of puts on Shopify. He'll be on Friday for the options segment that we do. We sold a bunch of puts at $55. I think we sold like five contracts or close to 10 contracts. And the idea was Shopify is down so much year to date. It fell 20% after earnings, that it's going to be really hard, as you can see right here, 79 to 56. It's going to be really hard for this bad boy to go down to the 40s and 30s. Now, is it overvalued at 59? Yeah, you could argue that the price of sales is a little bit too much. You could definitely argue that the PE of 58, given the growth, is not enough. Shopify are now here breaking $60. They got upgraded today by Goldman Sachs for $74, and they got upgraded to a buy. So that's what's helping them as well, up 5% on the day. But it seems like on the put premiums, they're pretty juicy, because after you fall 25%, you're probably not going down another 10 or 15% if you're a high quality company. And Shopify is one of the highest quality companies on the planet, even though they could be overvalued at $77 billion. So Shopify, we got to watch out. Maybe a little bit of a breakout coming here just on the technicals. And from a put premium perspective, not the worst bet, given they fell so much already. Shopify is profitable. They're not profitable for the full year, but they were profitable in the last 2 quarters. So Shopify is a profitable company. I'll tell you exactly how much net income they made last quarter. They did. Oh, wow. So actually they lost money last quarter, but they made money the previous 2 quarters. So in Q3, they did $718 million, Q4, $657. This quarter, the most recent one, $273. But I think this $273 is because they wrote off the delivery acquisition, and that's why they're taking an impairment charge on their net income. But I think they're operationally profitable. So in the next few quarters, Shopify should be profitable for the full year, which is good. Their revenue last quarter was $1.8 billion, quarter before $2.1 billion. So you could argue it's a bit overvalued, but people pay a high premium for a good quality stock, and Shopify is, one of the, just ask anyone that does e-commerce if they use Wix or Squarespace. They're going to say no, they use Shopify. Like, Shopify is the only game in town for small businesses. So you are paying a premium, but I do think from a technical perspective, after being down 20%, people that like a high quality company like Shopify are not going to dump it another 20, 30%. PDD is up 4.8%. Tesla still down 2.5%. Robinhood taking a bit of a hit as Bitcoin comes down. People probably taking some profits on Robinhood as well. It had a very nice run up, now $20.38. If we can hold 20, I will be happy with Robinhood. I do think the dips are getting bought pretty dramatically. If you just look at their order book volume, yesterday people were buying heavily in the 2070, 2080 range, pushed it back up to 21. So I do think this dip is something that people are going to want to take advantage of. Well, could we test 19? Sure. I think that's very possible. But if we hold 20 for the day, that's going to be the most exciting thing on Robinhood. And it's so crazy if we can hold 20, because, last week we were trying to hold $18. So definitely a nice bit of momentum there, but we got to see if we can hold that $20 range for Robinhood. Also, their May metrics are going to be out in June. So June 15th. So those May 15th metrics, that's going to be one catalyst upcoming for the company. They did decrease their entire margin rates today. That might be another reason the street's heading it down, because they're going to make less revenue on their margin, or that's the perceptual argument. But if they're going to drive millions and millions of people to use their margin and drive a lot more dollars into the platform and deposits to take advantage of their margin rates, that's probably going to help them as well. Palantir 21.26, Amazon at 184, ARKB 69.55, IBIT 39.64. That's up a bit on the day as Bitcoin is slightly down. Cisco $47, Walmart 65. Wow, Walmart's up and Target's down. That's definitely showing you the market thinks that it's a Target problem, not a Walmart problem, or not a retail problem. Target now down 8% of the day, because Walmart should be down if Target's that bad in sales. But it looks like the market's thinking, nope, it's a Target problem, not Walmart. HIMS is down 2.3% as well. That one ran up as well, so it makes sense. Kathy did sell a little bit of Robinhood, but again, she sold because of the Rule 12.3B for ETFs, which signifies that if a individual equity gets to be 5% of the overall weighting or value of an ETF, then you have to trim it a bit. And it lets you know whenever ARK sends out the emails, there's like 2 stars. And if those 2 stars are there, that's why they're selling. So the last time she sold Robinhood purely just to sell, it ran up to like $18, and that was like a month ago, and she sold like 1 million shares. But every other sell, like 100,000, 30,000, 50,000 shares, has been primarily due to that 1312B ETF rule that they have. PayPal's getting wrecked. Oh, goodness. Down 2.4%. Yeah, PayPal is getting wrecked. Would you buy Nubank? I like Nubank. I don't know enough about the business. I know my friend Tanner is super excited about Nubank. $57 billion market cap. That's a little misconstruing because the growth is phenomenal, even though, $57 billion market cap, people think it's expensive, but it's actually not expensive at all. When you look at the growth, growth is at 65% year over year. I don't know much about the Latin American banking industry, but I do know their growth is incredible. So I wouldn't buy Nubank per se, just because I don't know about them, but I don't think it's the worst buy. I know Buffett is in this one as well. One thing that's really interesting is I was listening to the Olin podcast over the weekend, and apparently they had a story about Stanley Druckenmiller buying a ton of equities in Argentina. And the reason he kind of bought the index for Argentina, and that thing is, I forgot the ticker, but that thing is up 100% over the past year. And the reason for that is he saw Milei, Javier Milei, basically the libertarian elected president of Argentina. He saw him talk at Davos 2 months ago, and he said, "You know what? This guy's going to completely change Argentina." And he bought a ton of Argentina index stocks, and it's up like 30% since he bought. And so it's really interesting. The reason I bring this up is because of Nubank. Like, if you see a trend in a particular country or part of the world, and the trend for Argentina is very simple. This guy is going to reduce regulations, increase capitalism and entrepreneurship. There's going to be more money that's spent and created, more wealth that is going to be created because of these free market policies in Argentina. We should buy the Argentinian index. And that's what he did. And so I think thematic investing is so interesting sometimes, because who would have thought, let's buy Argentina because the president is pro-capitalism. But I think that is the only reason, quite frankly, the index is up 100% year to date, because it seems like investors in Argentina are willing to bet on companies because companies have the freedom to actually build in Argentina. And so one interesting thing from sort of geographic thematic investing, Nvidia 944 now, Robinhood $20.19. So Robinhood having a nasty fall right here, down 4%. We'll see how it holds up throughout the rest of the day, but Robinhood taking a bit of a hit. Meta here at 468, Tesla 182, SMCI at 892, SMCI falling below $900. Eli Lilly at $800 as well, after their Chinese diabetes drug was approved yesterday as well. Celsius, where's Celsius? Celsius, wow. Celsius at 97, dude. Holy crap. There was a report that came out the other day that Celsius causes like some disease. And it wasn't just energy drinks. It was specific to Celsius. And it was published on a lot of publications because it was published by the AP. And the AP basically has like hundreds and thousands of different little media outlets. But it seems like no one cares, dude. Seems like no one cares. Celsius continues to inch higher. People like the energy drink. People like the energy drink. I think Celsius tastes disgusting, but I guess I'm in the minority there. How would you play AMD ahead of NVIDIA earnings? I wouldn't play AMD. I wouldn't play SMH. I wouldn't play SMC. I don't know how to play any of these stocks, because obviously if NVIDIA does well, it's good for NVIDIA, but it doesn't mean NVIDIA is going to go to the moon, right? Even a 5% move would be a $100 billion increase in market cap, which is incredible. So does AMD move off of NVIDIA? I don't know if it has to. I don't know if SMCI has to move off of NVIDIA. I don't know if Intel has to move off of NVIDIA. I think a lot of these companies, they've already had earnings. AMD earnings sucked. I mean, like, objectively, they sucked. They were not good. They were down or flat in every single metric they care about. Guidance was bad. Like, it just wasn't that good. AMD has always been argued to be expensive because you're paying a premium for a very high quality company, which is fine. But given how bad the earnings were, I don't know if NVIDIA can save their earnings. I think they have to put up a good Q2 as well. Now, unless NVIDIA just explodes so dramatically, like they pull up $28 billion in revenue, which is a $4 billion beat. That just goes, the industry is expanding so dramatically that if you're not in, then you are missing out at an unprecedented level. And that means whatever expectations you thought for AMD, even though they were down year over year in their last quarter, you've got to revise them. Because if NVIDIA is going up this much, TSM is going to go up, Lam Research is going to go up, Intel is going to go up, everybody's going to go up. TSM up 2% of the day if NVIDIA beats that badly. I just don't think NVIDIA is going to beat, by $4 or $5 billion. I think NVIDIA is going to have like a $1-2 billion beat. But if they do beat that crazily, then that's going to be really good for NVIDIA and for the entire market. I tried Celsius one time and it made me so sick. Yeah, dude, I just don't. I'd rather drink like a sugar-free Red Bull over a Celsius. Like, even that to me has better taste at the end of the day. Millet has studied Austrian economics and is eliminating wasteful government spend too. Yeah, and that's the reason Stanley Druckenmiller is in it. Yeah, look at this. Here's an example of this. The ARGT. So ARGT, which is one of the let me share this right here. One of the global Argentinian ETFs. Look at this thing. It's up 25% year to date. Over the past year, it's up 54%. I mean, you don't have to be a genius. Oh, here's the other one that I was looking at. BBVA, Argentina. BBVA. You don't have to be a genius. Does it show up here? Let's see. Okay, well, it's going to show you in Argentina. It's basically $11 in America, but look at this, up 157% year to date. Like, you don't have to be a genius to know that if the guy who's running the country is going to make it easier, it's kind of like Trump with the tax cuts in 2017, right? Let's talk about Trump in a second. If he makes it easier for you to pay less taxes and for you to build your business, the entire country is going to benefit. And so that type of thematic investing is so interesting, because if you can find those opportunities or those trends, you really don't have to be a rocket scientist. You just have to look at what's happening and then logically ask yourself, do you think that's going to help? And if that does help, then there is an opportunity there to buy up the indices there. Okay, where do we have Robinhood? Is Robinhood taking a drop? Robinhood, $20.07. Wow, Robinhood's getting dumped right now. You know, honestly, this might be Kathy. Maybe she's taking a little bit off the table right here. Could be Kathy. Robinhood here at $20.17. I wouldn't be surprised if this dip gets bought up. There were, again, a lot of people buying yesterday at those high 20s, and I'm sure they would be salivating for low 20s or high 19s. So we'll see by the next few hours how this plays out. But yeah, I don't really know why Robinhood's dropping too much. I mean, I know they reduced their margin rates. I don't think that's necessarily a reason why it's dropping. Bitcoin is down a little bit. Maybe that's why it's dropping. But outside of that, maybe a whale just liquidating some of their position. Potentially even Kathy just selling some on the open market and taking some profits. Another reason Robinhood could be dropping is because it's highly contingent on Nvidia. Like, one of the top 10 assets on Robinhood is Nvidia. And if Nvidia takes a crap today, Robinhood's assets under custody are going to come down, right? Because a lot of people own Nvidia on Robinhood. And in general, Robinhood's a brokerage. So if Nvidia takes a crap today, people are less incentivized to start trading because the bull market kind of pauses a little bit, right? If Nvidia falls back to like $700, $800, people take a little bit of a breather, which means trading stops on Robinhood. And so Robinhood takes a bit of a hit there. So the market could be a little scared that if Nvidia messes up, some of the brokerages don't do the best today as well. And so we'll see how that looks later today. FOMC minutes at 2 p.m. today. Yes, that is correct. FOMC at 2 minutes. Okay, so Emmanuel says, I'm team salivating for 19. Yeah, look, if it goes to 1918, dude, I think we all know the story. Now it's a question of, do you believe in the story or not? But the story is really obvious to me on Robinhood. So I think we know how this plays out. We know what happens by the end of the year. Just a question of if you understand the thesis and if the market gives you an opportunity again. Trump. So the Democrats are starting to switch the tone by which they're operating. And the reason for that is because Trump is basically saying, hey, I am the candidate for crypto. And I thought this was really interesting because now the reason we're seeing some of these Democrats put in bills that are more friendlier to crypto over the past coming weeks, over the past few weeks, is because they're realizing this is an election issue. They're already losing the border debate. And if they lose the crypto debate, they're fully screwed, which is why democracy to an extent works sometimes, right? Like, you've got a faction of the American public that wants crypto. You've got Trump that's like, by the way, his team put out a press release today saying he will accept campaign donations in Bitcoin. So literally they're full on embracing crypto. And then you've got the Democrats that are like anti-crypto for whatever stupid reason they're anti-crypto. And so you've got Trump saying, hey, I'm for crypto. And that's forcing the Democrats that don't want to lose the election to come to the middle. And that's kind of how democracy is supposed to work to an extent, right? One candidate who represents a certain subset of the population is supposed to influence the other subset to at least meet him halfway. And so we're seeing that right now with the Democrats. Here's an update on what's going on with the Democrats and crypto and how that impacts Bitcoin as well.
ETH is a lot higher in the last 24 hours on speculation that the ETF is coming. Step back a little bit. What seems to have happened is, Donald Trump 2 weeks ago got on stage and said, I'm the crypto president. And it was on the same day that Joe Biden had threatened to veto a relatively obscure piece of legislation that the SEC had put through, a rule on accounting, saying that crypto assets in custody needed to be held on balance sheet. And that kind of set off a firestorm where, it almost became a purity test, like Republican, good for crypto, Democrat, bad for crypto. And I think the Democratic regime woke up and saying, this is crazy, right? There are more crypto owners in America than there are dog owners, right? We have 85 million people that own crypto, and a lot of them are single issue voters. And the Democrats looked like they were the party against dogs. And so you've seen a pretty dramatic change. First of all, you had 9 senators cross the aisle and 21 congressmen on the SAB 21. And so that's passed, the repeal of that, and it'll go to Biden's desk. We'll see if he vetoes it or not. And all of a sudden, out of nowhere, what seems to be a complete about face with the SEC on the ETF. And, listen, I don't have any inside info other than talking to people in the markets, and we'll see. We do have an ETF in registrations. I got to be a little bit careful. But assuming, the market is right, and the market's usually pretty smart, it feels like someone at the Biden White House made a call and said, guys, we can't be the party against crypto anymore. And I think that's a seismic shift, because if those things actually happen, prices are going to be much higher than here.
So you're speculating that a phone call was made from the White House to Gary Gensler's office, and Gary Gensler, who has, for the most part, as you know, been relatively opposed to these instruments. In fact, he was opposed to the Bitcoin ETF until a court told him otherwise. You think he's going to do it, quote unquote, voluntarily, or maybe pseudo voluntarily, if in fact the president's telling him otherwise?
I am sensing a widespread shift amongst Democrats that don't want to let crypto be a big election issue, right? The crypto super PACs have raised over $150 million, and they've targeted Sherrod Brown and John Tester, elections that matter dearly to Democrats in swing states, in vulnerable Senate seats. Crypto should be bipartisan. And quite frankly, for our industry to do well, it needs to be bipartisan. And it has been really Elizabeth Warren and a small group of people that has kind of held the Democrats hostage on this. And what the Senate broadly said, Chuck Schumer, being the Senate leader who voted to overturn against Elizabeth, was enough. Like, this is becoming dumb. And Mike, so I'm sensing a real shift.
You talk about you talk about the industry doing this as if they're separate from you. You've been a big supporter over the years of President Biden. I don't know if you still are, but how much are you part of this effort?
Listen, I've had a real view that this needs to be bipartisan. So I have been meeting with Democrats and Republicans equally, trying to both educate. On the Democratic side, I've been trying to talk sense. I was like, guys, this could be the biggest own goal of the last 6 years. There is no reason to make crypto, which is a technology, a political issue.
It's so true, dude. It's so true. The Democrats are just, look, the Republicans have their own issues. The Democrats have their own issues, but making crypto political is dumb. Robinhood right here, $20.11. Bitcoin, 69,522. Making crypto political it's a technology. Like, if people want to trade it, as long as it's regulated and, you're protected against fines and abuses and potential malpractice, just like you are in the equity markets, people should be able to trade it. If people want to pay with crypto, if McDonald's accepts crypto, the government should have no say on what McDonald's should be able to do on accepting crypto. So Senator Warren and cracking down on crypto, and her main argument is that it's used for selling drugs and illegal things, like the things that are just like arguments from 2008. And so it's just such a dumb argument. And Trump straight up took advantage of it. Trump very easily was like, hey guys, yeah, if you care about crypto, then vote for me. And he did it in a way that really got a lot of people to be more excited about the fact that he is going to look at crypto policies and not be already opposed to them. Whereas Biden, you kind of don't know how Trump's going to act when it comes to crypto. Here's a quick clip of Trump talking about crypto and why he says you should vote for him if you care about crypto.
If you're in favor of crypto, you better vote for Trump. They are against it. The Biden doesn't even know what it is. If you ask Biden, sir, are you for or against crypto? What's that? What the? Get me off the stage. If you're
okay, dude, every time he finds a way to make everything funny, dude. Josh he's a funny guy. He's a funny guy. That's probably how. If you ask Biden about crypto, I don't know if he necessarily would know that much about it. I'm not saying Trump's cognitive abilities are that much more amazing than Biden. But I think we all can acknowledge, Biden is he's struggling a little bit as he's approaching almost 85, 86 years old. But again, I think the Democrats are going to make it political, and it's kind of dumb to make it that political. Tanner says there is only one political concern: does crypto weaken the dollar? I think that is a concern. I think that's definitely something that, a politician would consider. But I also think the politicians, including Trump, they don't have any understanding of crypto enough to make a sophisticated analysis on what would happen, what would need to happen in regards to inflation, the strength of the US dollar, and the potential of the entire crypto markets for it to have a negative adverse effect. I think they may think, oh, crypto good, dollar bad, people stop using dollar, that's bad for the economy. But that's the extent of their analysis, right? At least that's how Biden has, I think, done the analysis, or the Democrats. And it is a risk, does it weaken the dollar? But if it's not as big of a risk as what most people think, then there's definitely not a reason to keep it banned. Biden seemed way better than I thought on Howard Stern podcast. I think people are blowing his health a little out of proportion. So I listened a little bit of that Howard Stern podcast. Actually, when I was driving to DC, I listened to a little bit of it. He was good. He wasn't bad. And by the way, Biden, when he was talking with CNN a year ago on a 20-minute interview, I thought he was phenomenal in that interview. Like, there were no stutters, no uhs, there was no pauses. It's just recently in certain meetings, press conferences, that's when he turns a little weird. So on one-on-ones, he's actually okay. But when he gets in front of a group of people, that's when a lot of the gaffes start to happen a little bit more. We're going to see, dude, it's going to be an exciting election cycle. I mean, 2024, we're going to see where the economy is. If the S&P 500 at 530, the S&P is closer to 550, QQQ on the day right now at 456. I mean, I don't know, dude. Maybe people don't want to mess up the economy and they vote Biden again. But Steve Wiseman, actually, let's pull that up. Steve Wiseman believes, he is the guy who called the Big Short. He believes that Trump's winning no matter what. And the reason for that is, or not Steve Wiseman, Steve Wiseman. I got his name wrong. He believes that Trump's winning no matter what because of the Israel-Palestine situation. And that's kind of his main argument for what's happening. His argument is, look, and he has some things about Apple that I want to look at in a second. His argument is that Trump is going to win when during the Republican National Convention or Democratic National Convention, that's going to be in about 6 months, or less than 6 months. It's going to be in 2 months. There is going to be a bunch of people protesting Israel and saying that they support Hamas. And that is going to be the number one reason for why Trump wins. And so he's kind of on the bandwagon that there's no way Trump loses if that's the state of the Democratic Party. And I guess we'll see what ends up happening. But if that does happen, then the Democrats potentially might be in a tough scenario, even if the economy is doing that well. Robinhood's under 20. All right. So you got Robinhood with a nice 5% red candle. Look at that. Nice red candle on Robinhood. And again, I think the reason for this is because their margin rate's coming down. Maybe the street's okay, they're not going to pull up as much interest revenue. I think Robinhood is pretty calculated about that. And they realize that, hey, we're going to bring a lot more volumes, which is going to drive the interest revenue. Or this could just be a little bit of Nvidia concerns. If Nvidia falls, Robinhood's going to fall. Or this could be a whale selling. Whatever it is, if you wanted the 19s, they might get there, now hovering over that $20 range. And we'll see if that dip ends up getting bought. Here's Steve Wiseman on what he thinks about Apple and how he thinks that Apple is one of the more undervalued companies in the broader market due to AI. And then we'll get his thoughts on what's going on with politics as well.
Talk markets now with less than 24 hours until Nvidia reports earnings. An investor known for the Big Short sees opportunities in the entire AI space. Steve Wiseman is senior portfolio manager at Neuberger Berman. Steve, it's always great to see you.
Thanks
You're listening to our conversation.
Looking sharp today, too.
Looking sharp.
I mean, real. Look at this. Just take a second. All right. Let's just compliment my wife. We got to distance me and move on.
Valerie, nicely done. I was going to say, comment on Steve's mood, which is generally good, and you feel good about the economy as well. So you're listening to our conversation. How do you feel? I'm curious. How do you feel about the housing trade? If you are a believer that the economy is in good shape, the consumer is in pretty good shape.
I mean, the problem with the housing market is, people are stuck in their homes because they have 3% mortgages and they have jobs. So somebody's going to get a 7.5% mortgage to have the same monthly payment as the person with a 3% mortgage. The housing price has to get cut in half. Now, is somebody with a job going to sell their house and cut in half? No. So existing home sales are very weak. New home sales take share. And that's been the housing market for the last 2 years or so. I don't see it changing at all.
Okay. You are optimistic about AI, and we often talk about how Apple is perceived as sort of the laggard in AI. You think that there's a huge...
I think Apple's
passion.
actually the hidden AI play, not exactly today, but will be, because everybody's focused on the chips and everybody's focused on the cloud. But at the end of the day, when there will be apps, and I have no idea when that's going to be, but when there will be apps that the consumer can use, they're going to want to use it on their phone. And I have a new iPhone, and I know for sure that when all those apps come on, my phone is I'll need a new phone, and I'll need a new iPad, and I'll need a new laptop. And so when the apps show up, the biggest probably beneficiary is going to be Apple, because they're going to have a refresh of literally everything that they sell.
Does that same sort of trade happen with Microsoft, which just unveiled its new sort of hardware lineup that is AI equipped?
Partially. I mean, that's going to happen. But I don't know how much Apple... I mean, you're going to need to see people start to buy their laptops, and it's going to be probably need more than just Microsoft doing what it's doing. The apps have not come yet. When they will, and I have no idea when, that's when this whole refresh cycle is really going to take off.
So expanding the AI discussion, last time you were here, you talked about NVIDIA. I think you had said you had never seen an executive as confident as Jensen
and happy.
Huang.
He's happier than me.
Happier than you now.
Yes.
It's quite a thing. But do you see, that's obviously not the hidden one. It is the most obvious one. But is that one that you still feel comfortable holding?
I mean, look, right now, the easiest way to play AI is NVIDIA, AMD, few other chip players, and then anybody who is in the cloud or with a massive database. Beyond that, there's Apple, which I just mentioned. And after that, it's not clear, because so much of what's going to happen is unknown. There's no way to know at this point.
Steve, to change gears just a little bit, we'd be remiss not to ask you your view on the consumer, whether you see weakening. As someone that's also obviously played that, and that manifestation in the past was through the banks, and as someone that's so successful for having made a call, so many people were trying to make that same call over the last year and a half, and it's on some level, it's actually even more.
He made $1 billion betting against the market in 2008 for his clients, so it was a hell of a call that Steve made in 2008.
Impressive that you've kind of been in the other way, because I think the inclination for many investors was this is just a time bomb waiting to blow up. So what's the latest update from the front?
There's no time bomb. I mean, on the credit side, credit quality is fine. Credit card delinquencies are starting to come down. Charge-offs are kind of sticky, but they're at low levels. In terms of the health of the consumer, the upper-end consumer is in great shape. The lower-end consumer is having trouble with inflation, and it's showing up in their spending. And the middle consumer is kind of treading water. It's kind of the way it's been for a very, very long time. So I just don't see the consumer as impact. I mean, it impacts obviously certain subsectors, but it is not an issue for the overall economy.
There's that scene in When Harry Met Sally, I'll have what she's having. I mean, I'd like to have look at him. He looks great. He's happy Steve. I mean, it's fantastic. Congratulations on the transformation.
Thank you.
Okay, so, I mean, his argument here about Apple, I think, is very interesting. Obviously, this is what Dan Ives has been saying, that the more people get into Robinhood bouncing right at that $20 range now, more people that want to use AI applications are going to have to use it on the phone. Again, the problem here is that upgrade cycle short enough, and is the new AI iPhone interesting enough to get people to upgrade? And if it's not an AI iPhone, Enphase right here ripping up 6%. Let's see if there's any news on Enphase. If it's not the iPhone, but it's the AI App Store that actually creates the momentum behind Apple's developer service fees or advertising revenue, whatever it may be, then maybe that's the moat of Apple's AI play versus the iPhone itself, right? Because maybe you don't need the most impressive hardware to run AI apps. I'm sure you do. And if the apps are that amazing, people are going to upgrade. But it's going to be a question of if the apps are actually that good. Enphase right here, I don't know why it's up right now. I'm looking for a reason. I don't see a reason. Maybe it's a technical bounce. Wow, 6% on the day. If anyone knows, let me know in the chat. Why is Enphase up 6% on the day? Interesting. Very interesting. That's a big move, dude. 6% on Enphase. Maybe they think, I don't know. I mean, the easy answer is NVIDIA is going to do well. Rates will come down. Market's front running, but that's too easy on a 7% move on a day like this. Let me Google it real quick. I went on Twitter. Enphase Let's see, news. Oh, here we go. This is the actual answer. They have new microinverters in Finland. They're launching new microinverters in Finland, and they launched a new partnership announcement with a UK energy group for April of 2024. There you go. There you go. So Enphase is expanding internationally, getting some of that growth outside of the US, where they've been struggling a little bit, even though their earnings probably bottomed last quarter as they raised guidance. And so the market's buying up some Enphase. First Solar's up as well. Yeah. Solar Edge should be up on this. What is that? SEDG. Solar Edge is up. Wow, 7%. And then First Solar's up 8%. All right. The solar players having a good day. Having a good day. If you are in solar, Palantir up a little bit, 0.3% right now, 21.31. Snowflake up a little bit, SoFi 710, Shopify 59.33, and then Enphase here at 118.51 on the day. As a Palantir investor, I don't like seeing Enphase get rewarded for new contracts. Is that because Vitaly likes Enphase and Vitaly hates Palantir? Dude, I remember we had so many debates around Palantir versus Enphase. I ended up being right. I mean, I was right, dude. When we were debating Palantir at 7, Enphase was at 240, which one was the better buy? I was right. It was fucking Palantir at 7. Enphase has gone all the way down. Palantir's gone all the way up. Now, granted, over the long term, we'll see. Over the next couple of years, if solar really takes off and AI is just... Because remember when Carlos asked that question on Finance Junkies? He's like, what's the headline that gets Palantir to move higher? And I was like, it's 2 letters. It's A and I. If they do good, then you and I will make money if you are invested in Palantir, because I am. And literally, I pulled that out of my ass, dude. When he asked that question on the podcast, I was like, oh, AI. Like, I literally pulled... Because that's before ChatGPT. This was early, dude. This was January 2023. This was like him really challenging Palantir. And I was like, well, AI, that's going to work. That's going to be the headline. And then little do you know, fucking ChatGPT comes out 2 months later and AI is the headline along with GAAP profitability. Those two things, they got the job done. Enovix is up. Wow, Enovix up 5% on the day as well. Thomas says, I just don't understand why people are so bullish on residential solar. I agree with you, dude. I've never cared about solar panels ever, dude. I've never thought, oh my God, solar is like so exciting. It's just never been interesting to me ever. I know it's a big market opportunity, but with interest rates that are high, people don't care that much about financing it. But even if interest rates were low, I just don't see it as like we've had so many solar people come to our house and like ask us if we want to get the panels. And it's just like, we really don't care, dude. I just like, and maybe more people will care, but it's never been the most interesting thing to me. Now, granted, a lot of people do care, which is why Enphase has grown, right, over the past couple of years. But it's not like an opportunity like AI, in my opinion. Now, the valuation on Enphase, you could argue a little bit better than Palantir. Palantir at 50 billion, Enphase at 16 billion. But Palantir is a software company that has recurring revenues that can increase their margins to the close 90 to the high 90s. Right now, they're at 88, 84%. Whereas Enphase has 47% margins on hardware. And so definitely different businesses. Enphase growing a lot more, although not over the past year. If Palantir ramps up their growth, it's going to be hard to deny that the AI wave is not coming. That's the other thing about Palantir. Although the stock has been flat, dude, if we know AI is coming, that's why I think the market's asking Palantir to show them that AI is coming, right? So as in, or that they can capitalize on AI. If Nvidia crushes earnings, we know AI is here. We know like it's time for this market to expand. Palantir just has to put up good numbers. If they can keep putting up good numbers, the market is like unequivocally going to give them a bigger premium because they want to play AI, but they just need to make sure that it's not, a fake AI play. And the more Palantir improves their numbers, I think the better chance they have of capitalizing on AI as well. We did have, we'll do word of the day in a second, but we did have the Free Press actually tweet a video of Carp yesterday. Did not expect them to do that. This is a media publication that's growing in terms of its influence. And they actually tweeted something that Carp said on last earnings. Let's take a look at this and then we'll do word of the day. I was surprised. They put this on their platform and they highlighted Carp and the arguments he was making.
There are lots of questions about why we are so active in defending the values of the West. Our belief that the West is a superior way to live and our ways of organizing around that are the reason why our products are transformative, the reason why we have the best people in the world, the reason why a Palantir degree, as it were, is much more valuable than an Ivy League degree. Before the Ivy Leagues even, embraced the thin, new, woke religion, otherwise viewed as an intellectual cause, but in fact is a way of organizing things so that the greatest institutions of our time disappear and turn into discriminatory dysfunction. Palantir is a counterexample, and I'm super proud of the results. We are going to continue to execute, especially in the U.S.
I thought that was cool. They actually gave him a platform to make his argument about Western values a little bit more mainstream. You would never see the New York Times or the Washington Post post that. Like, they just wouldn't do that, right? But the free press is doing things a little differently. And I liked what Karp said right there at the end. We are a counterexample. One of the other ways I think to play Palantir is that if you are bullish that the woke kind of culture in our society is starting to die out, and we saw this with cancel culture. Cancel culture is dead. I mean, I wouldn't say it's dead, but it's definitely not as advanced as it was a couple of years ago. I mean, people, I think, are much more, and Elon buying Twitter really helped with this, but people are much more comfortable with saying things they care about without feeling like they're going to get all the backlash in the world. If we believe that cancel culture is dying and woke culture is going to die with it, there's going to be companies that benefit off that and gain more momentum. And Palantir might be one of the companies, just from a pure business perspective, that capitalize on the lack of people caring about cancel culture, or like the woke thesis that they make. I mean, like, for example, we talked about thematic investing, right? Argentina, more capitalism. Argentinian stocks are up 100% year to date. If Germany gets replaced by a non-left, maybe non-woke administration, I know the administration there right now is one of the reasons Palantir can't sell into their country. If Germany, if the German public just changes their mind and people start hating sort of the woke ideologies and leftist kind of politics, Palantir is able to more easily sell. That is a catalyst for the company over the next few years as well. So from those thematic perspectives, it seems like there are opportunities for Palantir to gain some momentum. All right, word of the day. Let's do word of the non-woke in Germany is called Nazi. It's in America too, dude. It's in America. It's getting a bit ridiculous throughout the entire world, but we'll see how that plays out over the next coming months. Yeah, Heinz says Democrats flipping on crypto is part of that movement as well. 1,000%, dude. 1,000%. Democrats flipping on crypto is part of them realizing they can't have these beliefs that are so unpopular with the far majority of people just to placate to whatever ideologies and dogmatisms they want to embrace. They're going to have to change, and that might happen all across the world. Okay, word of the day is capriole.
Capriole.
A caper or leap. Watching the young deer execute a playful capriole in the meadow brought a smile to my face. The acrobat soared through the air with a graceful capriole before landing flawlessly on the platform. Interesting.
Capriole.
So a leap. Nvidia stock better fucking capriole after these earnings, dude. We need a capriole. Let's see if we can get another word as well. Let's do Merriam-Webster. Merriam-Webster's word of the day is belie.
Belie.
To belie is to something to give a false idea or impression of it. Martin's easy banter and relaxed attitude belied his nervousness. Okay. Not bad. You want Palantir to capriole. Yeah, these are interesting. Let me see if I can get another one from vocabulary.com. I like finding words of the days that are like super weird, dude. Okay, here's another one. Extrude.
Extrude.
If you force material through an opening to give it form or shape, you're extruding the material. You can cause a pasta maker to extrude the pasta dough in various shapes. Yeah, I mean, look, in the context of Nvidia, I think if they can extrude through these earnings and really force higher guidance, a higher beat, they beat on EPS, they can keep doing what they got to do. Maybe they have a capriole inside of them. Let's see where Nvidia's at right now. Palantir 21.29, Nvidia 9.44. All right. So I'll be here 3:45 p.m. Nvidia is going to be the hottest story of the day. $945. We're going to see how this ends up playing out. Palantir extrude your data. That is correct. I extrude every morning. Yep. After your coffee. That's definitely something I would imagine people do. But dude, this is going to be an important day. This is going to be important. So get your food, get your drinks, get your alcohol, whatever gets you through the day. We'll be here at 3:45 p.m. Eastern Standard, 12:45 Pacific. Dude, this is why I can never live on the West Coast, dude. Nvidia earnings are supposed to happen at market close. It cannot be the middle of the day, the middle of the workday, 12:45, and I'm like in my office and I'm looking at the earnings. Like, I can't do that, dude. I need to like know the day's coming to an end and I'm focusing on earnings. not like I'm during lunch. Like, could you imagine during lunch, the biggest company in the world is giving earnings? I can never do that. I can never live in California for that reason. If I care about finance, I just can't imagine that, dude. How could you be eating fucking Chick-fil-A during earnings, dude? So yeah, that's going to be an important one for those across the entire world, Germany, Sweden, wherever you are from. Hope you join me here at 3:45 today. No matter what time it is going to be a very, very monumental earnings. And it's going to be a big one, dude. It's going to be a big one. I'll be here. I don't know if I'll have people joining me. I might be by myself on this one, but there's going to be a lot to cover. We got Elf after the bell, Snowflake after the bell, and then Nvidia. When they announce their numbers, market's either going up or down with it. And we'll see right before 4 p.m. Does the market have Nvidia inch lower or higher before the results come out? And we'll see what happens. You would never make it to market open on the West Coast, man. That's true, dude. I can never wake up. Not that I can't wake up that early, but it would just feel so weird waking up that early and doing the market open. I would have to wake up at 5:45 a.m. doing it. That's not a problem, but I would have to wake up at like 4:45, get ready. It's just, it would be a little tough. All right, so that's it. Give us the stock split, Jensen. Let's see if he does it. Thank you, everybody, for being here. 3:45 p.m. Eastern. We'll be back for NVIDIA. Have a great day, everybody. Get ready, and I'll see you guys in a few hours. Bye, everyone. Have a good one.